You're watching Famous Dave on YouTube.
Hello, friends, and welcome back to the Short Vol Show Live. So we've just gotten news that the jobs report came out for April, and a record 20.5 million jobs were lost, and the unemployment rate dropped to just under 15%, 14.75% to be specific. And but the market's really kind of unfazed about this. In fact, they seem to be expecting this move as really the up move that we had before the open has been pretty much maintained. Let's take a quick look here at the markets. Here you can see the job report there on the left. But as we look at the markets, we can see E-mini still up 32. Now they were up like 29 before the news came out, something like that. So really markets taking this completely in stride. NASDAQ currently up 80. And if we look at the action in prices for the E-minis in the last couple hours, you can see that really the markets seem to expect this, and we're not phased by this move. In fact, it looks like we did move slightly higher. Now, you'll notice something interesting about the scope of this chart that I have up here, and that is that we're not seeing 150 point, 200 point ranges now. Look, the range is from 2902 to 2918, right? So really like a 15 point range. That's tighter range by orders of magnitude than what we had before. That just means that stuff is slowing down how volatile the market is, and that is really reflected in the VIX. We currently have a VIX that's popped below 30 down to the 29 range. Now, in normal times, that would be a high level, so don't expect there to be some sort of hard bottom here at 29. This could very easily drift lower. And we've really seen the markets go back officially into Contango. Now, I've been teasing the markets going back into Contango for a few days now, but what we were waiting for was for the front month future to actually close overnight at 415 on the closing rotation to close lower than the second month future. And indeed, yesterday we had a close officially in Contango. Now, I tweeted this out to the guy who runs Vix Central, Eli Mintz, yesterday. I tweeted out to him, "Oh wow, we're actually in Contango," and he wrote back to me. I just don't think he ever wants to be upstage. So he wrote back to me, well, I won't believe it until we've been in Contango a week or something, which I don't really understand. We're either in Contango or we're not, and we officially have broken the streak. Now, different people would count the number of days that the backwardation streak was slightly differently, but let's just say it's around 50 days that we were in backwardation, which is going to actually hit the record books now. And I can expect now that we're back in Contango that if we can stay in Contango for a little while and start to build up a real curve, that that structure will hold firm. And once we're established in Contango, it can be a pretty rigid structure that keeps us in that position for a while. Now, several people have kind of come on and said, what does this mean we're in Contango? Retail traders want what my friends want, which is they want to be able to have me tell them what button they can press to turn their $1,000 into $2,000. So everybody wants to know, what does being in Contango mean, and how can I make money today on this information? Does this mean that I can press this button and sell this stock or buy this ETF today and turn it over tomorrow and make money on it? Well, that's not really what the deal is when stuff is in Contango. Contango is a very powerful decay force for VIX products, but it operates over time. And it is very valuable over time, but it's not something that is minute to minute, day to day. Somebody came on and was posting a trade in a VIX a VIX options trade that expired the next day, saying that the VIX was going to be down a little bit the next day. To which my response is, it's really a crapshoot what the VIX is going to do day to day, minute to minute, and is not something that anybody can predict with accuracy. So, you could say, well, it's definitely going to go down, and if it goes down, you could act like you're a genius, but it's really just the luck of the draw minute to minute. But when we have the effects of Contango, that can have really significant effects on these products as they decay over time. Let's take a look at the VIX term structure on VIX Central for a second here, and see actually where we are right this moment. So when we look at this moment, we can see it's showing Contango of 2%. So that's 2% per month, right? So if you multiply that by 12, you have these products, if everything stays the way it is just this minute, and we're only 1 day back into Contango, these products would decay 24% this year. So a strong effect of Contango when you realize that it's a monthly rating, not a yearly rating. And if we actually go to the Contango tab, which is of course our friend, one of the favorites of Edward, our moderator, this illustrates the time periods, and we can see everywhere below the red line we are in backwardation, and we can see this is from July 2019, and we can see this period here that we've had. This has been during the pandemic when we've been in steep backwardation, and we can see ourselves emerging from it right here. Now, how long will we stay above this line? Nobody can tell for sure, but it's a good sign that we're heading above this line. And as we broach the line right here, is that any more significant than yesterday? Well, no, but it just marks a turning point here where the forces of decay vis-a-vis specifically the term structure have shifted into the favor of the shorts here as things happened yesterday and we closed in Contango. I did want to mention I got to watch. I would highly recommend checking out the Elon Musk interview with on the Joe Rogan podcast. Now, this is the second time he was on Joe Rogan podcast, and my dad is not a huge fan of Elon Musk. He thinks that Elon Musk basically Obama subsidized him, and he wouldn't be anywhere if Obama hadn't given him money. But that aside, I think you should check this interview out. There's several interesting things about it. For one thing, Elon Musk is he is the head of Tesla and also the SpaceX program company, but he also has been working on this product that inserts in someone's head. It cuts out a little bit section of the skull and inserts these electrodes in someone's head to fight brain diseases, strokes, this sort of thing. And Joe Rogan and Elon had a very interesting conversation about how humans are becoming more connected to computers, and we know now that everybody almost feels like they're missing a limb if they don't have their cell phone with them at all times. And Elon was talking about how the data flow between us and the cell phone is very slow right now, as we have to press buttons with our thumbs to type in information, compare with computers. But they were talking about the future of robots and computers. Very interesting stuff on the on the virus. I don't know if you remember, but about a month ago, these statistics came out of New York City that were showing that the vast majority of people actually dying from the coronavirus already had pre-existing conditions. And Elon Musk was highlighting that this disease is much less dangerous as far as fatalities to somebody who doesn't have pre-existing conditions than was thought before. In fact, it's much. And Elon Musk was also talking about how statistically, a lot of deaths are being reported as coming from the virus, even if they're just sort of tangentially related. Now, with a lot of hospitals at like 50% capacity and really struggling, if they check the box that says corona related for the virus, all of a sudden they get like another $8,000 per patient or something. And there's a lot of deaths that are being wouldn't normally be put in the category of like coronavirus, but just because, there had something to do with coronavirus, like tangentially, they are being considered coronavirus deaths. So I think this is good news for everybody that there's less of a threat to the average citizen than we thought before. And then they talked about issues of, how much can the government tell you what to do and this sort of thing. Anyways, it was a fascinating interview. You should definitely check it out. Moving on to national news, and really important, when we go on Drudge Report, usually Drudge Report is all to do with the virus and stuff. But the main story today is here. Father and son charged with hunting a black man, murder shocks the nation. So this guy was jogging Amand Arbery, and he was very clearly murdered by these guys like 2 months ago. And the video of it was leaked a couple days ago, and no charges have been brought or anything. And 2 months later, finally, there's charges have been brought against these two men who basically came up on a jogger and killed him and murdered him. And there's a video of it. So I think that this had to happen. It's very important that this is an important case, and I'm glad that something is being done about it. All right, so we see the VIX dip below 30 once again, and the trend continues lower. Now, people the whole way up in the rally and down in the VIX, there's people on the sidelines saying, well, this is the bottom. It's time to sell the market. It's time to buy the VIX. And yet, things continue to go lower in the VIX. Now, our positions in the account here have been short the VIX for some time now, and things have been working out great. SVXY, if we look at that, we are long butterflies, and the delta is showing long 200 deltas right now. That's actually kind of inaccurate because of some strange marks yesterday. If you look at the P&L on the account right now, once again, it bounces around a lot because of marks, but right now it's showing $7,400. I expect as soon as the open happens, this is going to pop back up to over 10,000. It's just kind of weird marks on these butterflies. The bulk of the position in SVXY is out here 400 days out. And if we pull up on Thinkorswim these charts and look at the volume open interest, you can see there's almost no open interest in these strikes, and almost nothing trading day to day. So this is something that's going to bounce around a lot, and it's a good illustration for you if you're watching me trade this, because you can see how much the P&L just bounces around, and it can be distracting if you don't realize that this is just marks and it doesn't really mean anything. We're long deltas in this, and as SVXY rallies, we will make money over the long term. We still have 400 days till expiration here. Now, once again, this is the 50, 70, 90 butterfly. So what that means is we are looking, ultimately, we need SVXY to be above $50 in 400 days. And we're currently heading in the right direction. If we look at the chart here, we can see this did come down from the $69 area. Now we're up around $33. We're back to $33. We hit a low of $26 a couple weeks ago. But, having us back in Contango and this decay is huge for this position, because once again, this Contango doesn't have much of an effect short term, but we're looking at a position that expires in 400 days. So over that time period, Contango will have a huge effect at pulling this upwards back towards 70. Meanwhile, same thing, VXX, we are along the 38-34 put spread, and when we put this position on, VXX was around $41, so it was kind of like away from the strikes. But now, the 38-34 put spread seems like right in play, with VXX looking to open around 36. We are like halfway home, and we still have, this position was put on like a week, 2 weeks ago. We still have 133 days till expiration, and we've already traveled half the way we need to travel. So that's good news. Both these positions seem to be working out at the time. Now remember, we've given ourselves plenty of time, so we could have any number of spikes in between now and expiration and have these positions still work out. But the key and the beautiful thing, and why I've been making such a big deal about Contango, is that the term structure going back in Contango is going to help out these positions immeasurably. And Eli Mintz, the guy I was talking about earlier in the broadcast, he has a quote, I think he still has it up on his Twitter account, that says, Contango losses are forever. And indeed, when we are in Contango state like yesterday, and it appears we're going to close again today in Contango state, when we rebalance in that state, it forever affects these products, and it creates more potential for them to move lower. Remember, nothing is either created or destroyed during the rebalancing of these products. So it's not like there's some sort of cash transaction that makes them worth less as we rebalance in Contango, but rather it's just pulling the average price of the futures higher in regard to where the VIX is, and this gives us more room for these to fall towards the VIX. So the whole process of making money to the short side is futures falling towards the VIX. So the first thing we need is we need the VIX lower than the futures. We accomplished that about a week ago. And then we need the front month future lower than the second month future. And we accomplished that yesterday. So with these two ingredients in place, we're putting more and more edge on our side to make money to the downside in VXX, VXX, TVIX, and UVXY, and more potential to the upside in the inverse SVXY. So that's kind of where we stand today. Let's go to the chat really briefly here and see what we got going on there. Not a whole lot of action in the chat this morning. It's amazing how things have kind of dropped off a little bit. I don't know if that's market wide or if people just aren't paying as much attention to the VIX right now. I suspect that there's just not as much retail activity as was going on before, but this is an exciting time for me because, you know, the positions are making money. Hey, what's up, Tom? It's nice to see you. We caught you finally live in one of these events. Yeah, I'm trying to I want to have a regular schedule so that there's no need. I saw your message about having some sort of alert as to when we come on. I'd rather just have a regular schedule so that people know exactly when I'm going to be on. It's kind of hard. Actually, it shouldn't be hard now when everybody's stuck at home. So I'm going to try better to, you know, just come on around 9 o'clock more days than not and have a regular schedule. I hope people are making money and can successfully make money trading this stuff. And I know it's been a shocker to a lot of people that the market has continued to rally from here. And it seems like a lot of people have missed the boat, and it can be hard to, like, you know, you've been thinking the market was going to go lower for so long. It can be hard to buy it at any one point because you're like, well, what if I buy it and then it goes straight down from there? And that is sort of a risk. As I said, with the VIX products, I'm taking a long-term approach to things. So I just put the position on and I'm just kind of leaving it. Just to look at a couple more things. Oil, we noticed oil back to over $20, up to $24, almost $25 a barrel, which is great. I know it's hard to tell, Tom says, on the early side. You know, we have people over the world, so some people it's late, some people it's early, and I know that the average American's sleep is confused right now. I have several friends that are like either staying up really late at night, or they're sleeping all day, or they just don't know what's going on because people don't have regular work hours, and it's a little confusing. So that's why it's great that this stuff can be rebroadcast. You can watch it whenever you want. But this moment was an important moment, I think, for the VIX. Even though we've been coming in lately, I think we needed to wait to get this jobs report for like the go-ahead for the VIX to move lower. And I would expect all things kind of staying the same. If the market kind of stays where it is, I would expect the VIX to continue to leak lower into the afternoon today as we come into the weekend, because this was a big piece of uncertainty that was ahead of the market that has been cleared up, this jobs report. Not that it's a good number by any means, but at least it's over with. 9 p.m. See, there's an example, Brent, and it's 9 p.m. in Taiwan. That's interesting. You know, I'd love to go to Taiwan. I've never had the chance to check it out. My dad's been there, but I've never had the chance to check it out. But I've been looking at, let me just talk about one more stock before I let you go here. I've been looking at this M&K recently, and I kind of missed the boat a couple weeks. You know, this is a stock that I was long for like months and months and months, and I was long around the $1.87 level, and then it ripped from $1.87 up to $3 and change. Now it's kind of come in a little bit, and I was looking. There was a great options trade setting up in here, where there was a book. If we go out to January options here, there was a book that was bid for options out in time. Was bid for a bunch of options, and it was lining up right next to, so for example here, if you can see the screen here, these January three, I think it's the 3 calls were offered at 75 cents. Now this was a little lower. Stock was like 260, but there was this book of these January 3 calls offered at 75 cents, and then there was a book where they were bidding for, I think it was the Jan 10s they were bidding 25 cents for. Anyways, it lined up to be this 310 call spread, and you were only paying 50 cents for the 310 call spread in M&K out to January, which was a beautiful spread. And I was looking at it, and I didn't pull the trigger fast enough. I saw the calls were offered at 90 cents, and all of a sudden they came in and offered at 75 cents, and I should have jumped, but I missed it. And I saw one trader came in and did exactly what I wanted to do, which is he bought these calls paying 75 cents, and then he turned around and sold the book. There were 75 in the book of the 10 calls paying 25 cents, and put on this awesome spread. So, you know, I had this kind of FOMO moment where I'm like, oh, that would have been an awesome trade. And then I kind of stopped looking at it, and it's popped since then. It's gone from 260 up to 318. So not a huge move up, but I think this company has a lot of products. They've been consistently profitable. They did get caught up in the whole Purdue Pharma thing, but you know, a company that's making money and has products and has employees and all these good things certainly has been affected by the crisis somewhat. But I think the company that has products that actually they're selling and making money on is much better idea to trade than one of these biotech dollar stocks that like has one product that they have in the pipeline, and they're not even sure if they're going to get approval for it or something like that. So so there you have it. I was looking at selling maybe some UCO calls or something like that, just because the premiums were so rich, but oils are really not my specialty. And what I've done is, although I've looked at these other things, what I've actually done as far as execution-wise trading is stick to my VIX products, stick to the short vol long-term strategy, and so far it's worked out well. We'll see where we go from here with the VIX, but certainly feeling positive that we're back in Contango here, and it looks like we could stay there for a while. Look, everybody in the chat are members of the channel. I'm so honored that all these people that are watching right now have chose to honor me by supporting the channel. So thank you all for your support. That's awesome. I hope that everybody can make money moving forward this year. I know it's been a mixed bag for people, I would say. I know some people that have done really well this year. I know other people that have really struggled, but the opportunity is out there. Spread with that wide spread can catch those market orders. Yeah, it must, first of all, from Brent, it must be hard being in Taiwan because the hours are so skewed. And to Tom, as far as putting orders in for options, I would never want to put market orders in for options these days with the markets being so wide, because you can usually get filled mid-market on everything. So I would stick to limit orders all the time. I'm not even a fan of like stop loss orders with stocks or this. People will. There's this sort of basic trading strategy which is taught, which is you look at charts, you get a setup that you feel has a high probability, so you either initiate a trade buying or selling something, and then you put your stop loss orders in, and then you just wait till either the trade goes your way or you get stopped out. That's a very basic kind of idea of trading, and it's not something that I feel I could be profitable in myself or the way I like to trade. I don't like stop loss orders at all. I'd rather, if I have a position that's concerning me and I have risk on it, I'd rather be watching it myself with my hand on the trigger and make those trading decisions myself, because so many times a stop loss, it could be just this head fake thing. And market makers know where people like to put stop loss orders in, and a lot of times they will run the underlying through some important point that they know is an important point on the charts, just to pick up all those stop orders, and then they'll run it right back the other direction. So I'm very careful about that. First day of new Contango market. We broke the streak like Brent said, but also like Brent said, this is no signal. Us going into Contango it's no signal that like everything is super green or rosy. The chart could be, if one word could be used to describe the Vix term structure right now, it would be flat. It wouldn't be like, oh, we're in massive Contango, oh, we're in massive backwardation. It's flat, and it's not really giving edge to one way or another. And again, this doesn't provide direction. We can turn around and go right back in the other direction tomorrow. There's no more certainty in which direction we're going than there was yesterday. Now, certainly if you check out Brent's newsletters and his service, and you look at the various indicators he provides, that those sort of indicators can provide more clarity in this situation. But just coming into the situation and seeing like, oh, we're back in Contango, reading that headline, that in itself doesn't give us any clarity as far as to what we should do, what our position size would be, what we should put on or take off, and whatnot. Once again, people want actionable information. When they hear we're back in Contango, they say, well, what does that mean? What button should I press today to make money? And it is not that simple. But what I would recommend is, if you're just starting out, is that you just start to follow every day. Take a look at the term structure every day. Take a look at the futures, see what's happening. And over time, you'll start to feel this sort of the ebb and flow of things and how stuff works and unfolds. I am a position trader. I have trades on for a term of time as opposed to back and forth minute trades, and you can watch the positions and see what happens with them. All right, I've wasted enough of your time. As we come into the open, we've got 3 minutes to the open here today. It looks like the news is out, and the market is very, very much not moved on the news. It's really a non-event here this morning, as we got the figure of 20 million lost job, or 20 million, is it lost jobs? Unemployment approaching 15%, which is big trouble long term. A lot of these things are very scary long term for the market. So even though we've rallied, and I caution people about shorting this market, it wouldn't be surprising to anyone if we had another down move because of all this bad news. So 20 million jobs lost in April. Unemployment rate jumps to 14%, 14.7%. Big negative news. The market kind of expected this, though, and it seems to have largely shaken it off as we come into the open today. Thanks for watching Short Vol Show Live. Have a great weekend, guys and gals.
You're watching Famous Dave.